One of the things that I am asked on this channel repeatedly is, Michael, could you find somebody to talk about Florida real estate? Well, folks, you are in for a treat today. Somebody that I follow on Twitter has graciously agreed to come in and talk Florida real estate. John Pompliano is here. John, how are you?
I'm great. Thanks for having me, Michael. I really appreciate it.
Absolutely, folks. So, John, do us a favor, introduce yourself to the audience, what you do, what you're doing in Florida, and we'll just get into the conversation.
Yeah, yeah. Well, thanks for the intro. Let's see. I'm a realtor in Florida. It's kind of my trade, and then I do a few other things as well. I invest in both real estate and private companies as well. Obviously, have some equities in my investments as well. But other than that, just I focus most of my time on real estate. I'm helping Lance with Resi Club as well. I noticed you had him on your podcast, which
Yeah.
was a great listen. So anyone who hasn't listened to that, go listen to it.
Absolutely. Lance is a Thursday routine guest. He's actually coming out to our event in Vegas. So yeah, Resi Club, ResiClubAnalytics.com. If you're not on their free email list, I don't know what you're doing. Get on that immediately. Yes, Lance Lambert is amazing. So let's talk about Florida real estate. Florida is a big state. Where do you focus on, or where do you reside?
Miami-Dade, right?
Okay.
So I go a little bit more north towards Broward County. Not pretty much where I'll stop is Daytona.
Okay. All right.
So pretty
Uh,
pretty far up there.
yeah. So and we'll talk about private equity in a minute, but I want to stay on the real estate front. Florida is seen a lot, right? Real estate in general across the country, but Florida has seen a lot of net migration. They obviously um, chose different options than my state of California when it came to the pandemic. Obviously, I don't think that's a secret to anyone. So why don't we just talk about what's been going on in Florida the last couple of years? Because at least from a migration standpoint, it seems like again, outsider's opinion, a pretty quick and mass migration.
Yeah, it depends really where you look at in Florida, right? Miami
Okay.
acts very differently than Tampa or Orlando, two
Okay.
other major hubs, obviously, in Florida. The one stat I always used that I always found interesting was Miami-Dade County lost residents from 2020 to 2023. And that's
Ah,
interesting to me because the narrative is, look how great Florida is doing. And Florida is doing very well. Obviously, home prices in Miami, up 50+% over the last 3-4 years. But I think it's interesting because it's the type of person coming to Florida, right? So
hmm.
we got a lot of people from New York, a lot of people from California. These people leaving these high tax areas, coming down for low taxes, good weather, and just advantageous living. Uh,
Yeah.
Tampa Miami is a different animal because it's very isolated, right? So
Okay.
although we lost residents, prices are through the roof here, right?
Hmm.
So really what happened was a lot of people got gentrified out of the Miami-Dade area and pushed into Central Florida like Orlando or other places in Florida, while Miami saw a bunch of affluent people come here, right? So you can tell that by what they're building.
Yeah, it's interesting. One of the people that I have on every week, Dion gets credit for this. He's like the normal affordability index that everybody's used and I've used for 20 plus years is broken because basically what you just highlighted, what's happened in a lot of cities is you've had wealthy defined as ever what, however you want to define that, moving to net new areas and thinking it's cheap. And thus the people that live there as prices rise, they're forced to go up because their local incomes can't support these net new prices. Is that what happened in Miami?
Yeah, I would say so. So I can use myself as a good example. I came from New York during the pandemic. Where do I want to go? Where can I live that I enjoy? And I chose Miami. I chose Miami for a variety of reasons. But one of the things I noticed coming down here is I knew this before, but there are pros and cons of every city, right?
Sure.
So no matter where you live, there's going to be pros and cons for each individual in their situation. For my thinking was, okay, cheap taxes. So save 13% on a high tax bracket moving down from New York to Miami. Also, you get more bang for your buck in housing down here. So while I think it's relatively cheap, look at apartments in New York. They're 4,000 plus for a one bedroom. That's a lot
Yeah.
of money down here. It's right under 3,000. So that difference, I think, is really like, hey, look, I got a pool, right? I have all these other amenities that you wouldn't get in a New York apartment. You would get a walk up on the 8th floor for the same price. So I think that's the big difference, and I think that's why a lot of people move down.
Yeah. When I think of Florida historically, I think retirement, right? You age out in Canada, you you just want to go somewhere warm, whether it's New York, whatever. Pandemic, again, total outsider. You're the Florida expert. Really changed that. And again, it's was quality of life, right? You left New York, small footprint, crazy rent, to a better life. Um, there's now folks. I forget his last name. There's one of the big hedge fund guys. I think he's coming out at Ken Griffin. I think
Yep.
is calling Miami the next hub of finance. So it does seem like Miami is. I don't know if I want to call it maturing, adding more balanced jobs and infrastructure. Than hey, if you're 65, you got to come to Florida, right? It seems to be evolving.
Yeah, I think for the last 2 decades, right, it's really been that retirement haven for people. And the moves that Ken Griffin, Bezos just moved back, right? So all these high
Yeah.
profile people are coming and people will follow them, right? They want to be around them. They want to be in their inner circle. And Ken Griffin alone is bringing, around 1,000 employees down to South Florida.
Yeah. Yeah. Ken Griffin moving there is making that big commitment. That will be copied. It may be copied by smaller boutique firms, but um, there will be more coming. I think that's a pretty big tell. Um, Obviously, something I've heard again in the news and the media is obviously insurance has been something that's shocking people in Florida. Obviously, there's been, I guess, over the decade, many big hurricanes, but one just came through relatively recently that shocked a lot of people. What are you seeing on the ground? Is it as much that the media makes it out to be?
It really is. So a lot of insurers have left the state completely, right? We're
Mm,
not going to renew policies, go find a new one.
right.
And the state has actually had to step in and try to help this situation because that's one of those things when people talk about, oh, let me buy a home for, a fixed rate. I know how much I'm going to pay every month. There are variables in there, right? Things break, insurance rates go up. So there's things that people have to think about. And I don't think they are fully thinking about it until they're like, okay, let me go buy a home. And once they go to buy that home, they're like, oh, wow, it comes with all these other things.
Yeah. Yeah. I've heard a lot of people seeing their escrow statements. Escrow statements typically are taxes and insurance. They're typically a part of mortgages today. And then when it comes up on renewal, they're getting these big adjustments up because maybe the insurance when they bought was, I'm making these numbers up, 4 grand, and now it's 12 grand. Well, you got to make up that 8 grand somewhere, and your escrow accounts go up. So I think there's a lot of people shocked by that. Is the state and the city talking about it? Getting those back to lower numbers, or is it just cost of doing business and it is what it is?
Unfortunately, it seems like it is the cost of doing business down here in
Mm,
Florida, right? If you want to
okay.
insure a home in a state that is notoriously hit with hurricanes and other natural disasters, it's unfortunately the cost of business. But what does that mean for owners? It's a different story, right? If you own a property here in South Florida, you're pissed. You're
Yeah.
essentially like, look, my insurance rate has tripled over the last 3 years, and there's
Right.
nothing you can do to stop it.
Well, as a real estate agent, I'm curious because again, affordability has lots of causes, and again, your insurance triples. That may be a breaking point for lots of people. Are you having new listings come to you just saying, "Hey, John, I can't afford it. I got to sell. I got to move to Orlando or wherever else"?
Yeah, I think that people move for different reasons, right? So transaction volumes, I know you're in the weeds of it. Transaction volumes are slowly ticking back up,
Mm,
even in Florida. The interesting thing about Miami is transaction volumes are slowly ticking up, but prices have been remaining stable, right? So you're
mm.
not seeing that big turnover in prices just yet. Obviously, you see that in Phoenix and Tampa and other areas, but Miami's just it's been performing differently, I think, than a lot of other metros over the last couple of years.
Yeah, I mean, one of the things that you have to watch as an investor or a home buyer, and I guess an agent as well. And again, I'm saying this as a guy who experienced the real estate crash of '08 through 10, right? Was you got to watch for waves of inventory. And if the insurance thing is as widespread as it feels it might be in Florida, at least in some of these coastal areas, there could be some people are like, I can't live here anymore. I don't have an option. And if that happens enough, that could be a wave of net new supply and cause a problem.
Yeah, but I think the key thing here is insurance is one aspect of it, and then obviously
Sure.
the interest rates are going to be the major component for people on affordability basis, right? A lot of people have been locked into those low rates, and if you have a sub 3% mortgage right now, your house hasn't gained too much appreciation because you bought it at the peak and prices are kind of stabilized, turning over. You're not looking to sell anytime soon, right?
Mm,
So as long as you can the best saying I've ever heard in real estate is have enough money to weather the storm. So you've been through 2008,
Oh
right?
yeah.
When you have prices turning down drastically, as long as you don't have floating debt and you can weather the storm, you're going to be okay on a long 10, 20-year basis. And that's mostly how I think about it is
Mhm.
where will things be in 10 years, not where will things be in, 365 days.
Gotcha, gotcha. The one thing about Florida, and again, as a complete outsider, but somebody who consumes Lance, right, Resi Club's data, it does feel, again, completely an outsider, that there are some cities in Florida that just have gone too far too fast. And there's some give back coming. Not a lot. I'm not talking a crash or anything, but it's like, man, you can't keep stacking, 10% on top of 10% on top of 10% forever, right? Trees don't grow to the heavens. What do you think of what do you think of that?
It depends on what segment of the market you're looking at, right? So multifamily and residential are going to act a little bit differently than each other.
Sure.
Multifamily cap rates have been suppressed over the last 3 years because money was so cheap. Now, if you want to go buy a multifamily property and you're looking at, 5% cap rate, go put your money in treasuries. Yeah, there's some tax advantages to owning the real estate, but really it's the headache of owning the real estate. Landlord comes with a lot of risk owning properties. So I think just for people is to, go ahead and look at where's things going to be and just look, rents are even turning over right now,
Mm,
right, in a
yeah.
lot of places. And there's landlords just don't know what to do. And if you're stuck owning a property on floating debt with
Yeah.
you bought it at a 4.5 cap, you're not happy right now. And I think people are starting to get worried. And look, it's better to lose money on an investment than to hold it and go under.
Yeah, bleed out. Yeah, absolutely. I saw many people try to make that choice last time. That's why I had this saying, no alligators. Right. If everything cash flows, you do have that unlimited holding time. But if you have a bunch of alligators, that they can eat you alive, and it's not a great place to be. So totally agree with that.
I like
Um,
that.
yeah. So when you think about real estate in Florida over the next decade, do you think migration still is net positive? And do you think Miami turns around, becomes net positive? So let's talk about Florida first, and then maybe your backyard over the next decade or so.
Florida, I think, will definitely gain residents over the next 10 years, right? It is perfectly positioned to capture a lot of this momentum that has been built, right? So when you see, we talked about Bezos and Ken Griffin and all these corporations coming down, is who's going to work there, right? So they can
Right.
either bring employees from other states or you can find employees in the state that you move to. And I think one of the biggest problems with Florida is the lack of talent, actually, that's down here, right? So there's not a lot of engineers for these technology companies. And to be that finance tech hub that everyone's trying to be, even Tampa with Kathy Wood out in Tampa, right,
Yeah.
is just to be that financial and tech hub. I think you need the people to support your business. Obviously, COVID changed everything. Everyone wants to work remote now. No one wants to do anything. No one wants to go into the office, excuse me. So it's just a different environment now than it was.
Yeah. So let's something else that I've started to feel in markets that I look at every day, and again, Florida is its own animal that I know nothing about. It looked like in November and December, really October, I guess, when rates hit 8%, they got to 8.03, I think November 2nd or 3rd. The market really slowed down because shockingly rates matter. And at 8%, it just stopped the market. What have you seen in the last couple of 10 days? I mean, I'm hearing from agents that are like, hey, I had a listing that was 40 days old, no offers, and now I have three. Um, Maybe Florida is so hot you didn't really pause. I don't know. But what have you seen? Have you seen a noticeable transition in the last couple of weeks?
Yeah, definitely more active buyers and more active sellers, right?
Oh,
People
okay.
know that, well, people know that when interest rates comes down, there's in 2020 was a wild example, but it's a feeding frenzy, right? When
Mhm.
there's so much pent up demand, people want to own homes. Unaffordability is at a 40-year high. People are just sitting on the sidelines waiting. But like I said, if you have, the ability to have 20% down, where do you want to allocate your capital? That's a completely different story. But I think there's a lot of pent up demand in the market, and I think as inventory continues to trickle onto the market, there will be buyers. It's just at what price.
Well, let's talk about the inventory because again, when I look at the real estate market, the thing that's seems to be constant to us is we're half of where we should be in active listings, roughly 500 grand. We should be more at 1.1. Those are national numbers. But if if rates come down low enough, the talk track is that inventory will show up. Is that what's happening? Did this 1.5% drop in rates bring net new inventory, or not really?
It actually did,
Okay,
surprisingly, right? So
awesome.
it's slowly trickling there, and I'm speaking to Miami specifically, but
Sure.
probably in Florida in general, is it's slowly getting there. And I think that people need to realize that as you continue to lower rates, people will continue to go into the market, right? They're
Okay.
just looking at their opportunity and saying, hey, look, like people know that it's more advantageous to own real estate rather than rent. But right now, it's way more advantageous to rent rather than own.
For sure. For sure. So who is selling? Is it somebody looking to time the market? They're going to sell at the top, take a bunch of money, put it in a bank and rent for a couple of years? Or, is it death and divorce, the old standards, or who's selling?
Death and divorce, anyone that has a life event obviously is,
Mhm.
they're forced sellers. They have to
Sure.
sell. And it's unfortunate because if they're locked into a low rate or something like that, then they can't get out of it. Or excuse me, they have to sell it. And then on the other hand, it's just people that are looking at the market and saying, where's it going to be in 3 years? Where's it going to be
Mhm.
in 5 years? Right. And where do I want to allocate my capital to make money? And that's the number one thing I talk to investors about is where can I make money and where can I make the most of it? Now, with the way prices are over the last 3 years being up 50+% in Miami specifically, you're not going to see that 5%, 10% appreciation over the next 12 months. And I think they're
Mhm.
really pricing that in and saying, look, like you bought it at a 4.5 cap. If you bought a property for $2 million, and I think it's only worth 1.5, those are the offers you're going to get. And I think sellers have to be realistic about, timing. When do I sell and at what price?
So I think what you're saying, and I want to bring it to residential, which is a lot of one rental at a time community. There are some homeowners that bought pre 20 that are sitting on a lot of gains that are choosing to sell now, putting cash, allocating it somewhere else, and then they're going to purposely choose to rent for some time. Is that what I'm hearing you say?
Yeah, I think a lot of people are doing that, right? They're
Okay.
seeing they're seeing the cost and saying, "Hey, look, what can I do with that 20% down?" Right? So, can I
Yep.
go make money somewhere else? Treasuries are giving off 5%. That's
Yep.
pretty good. It's not going to move the needle for a lot of these people, but it's definitely going to help. And
Okay.
then for other people, it's just like what would you rather do? Would you rather lock up a bunch of your capital for something that you don't really have a lot of belief in? And I'm saying this as an agent. I think
Sure.
people should rent right now.
Okay.
But once again, it just depends on your certain situation.
Yeah, I think the rent versus cost equation, I don't think it's ever been this bad. I mean, if you look at the charts, it's a huge, huge gap. So it's interesting. Something I haven't thought a lot about, and I'm grateful for this conversation, is there are people that are I'll call it timing the market, right? Trying to call the top, sell, I mean, people did that in '06. I know a couple of people did that. I did that, frankly. I 1031 out of homes into apartments. So I made a call like that. I just chose to move the equity into a multifamily. So yeah, that's something we have to think about because one of the things that I have to watch is supply. If we get a lot of consumers that make this call, I'm going to rent versus own and sell and just pocket the money, that could change the market. That could change the market overnight if they did it in a big enough wave.
Yeah, absolutely. I mean, both sides of the equation, supply and demand, right? And I think we're really hurting on supply right now with inventory down and people not wanting to move, locked in low rates on the single family side of things. And then demand is, I think there's a lot of pent up demand in the market that's waiting to pounce on opportunities,
Yeah.
whether that's institutional investors, single families just wanting to upsize, downsize, whatever it is. I think there's a lot of pent up demand and people are just waiting for prices kind of to turn over. I'm curious what you've been seeing with rental prices out there in California. If you've been seeing them turn over a little bit. Yeah.
Yeah. So again, I always want to be specific. When you look at multifamily, which is about half my portfolio, rents are flat, if not down slightly. However, single family homes still up 3, 4, 5%. Single family homes where people want to be. It has a backyard. It's got storage, no neighbors, right? People are very much valuing space. And we don't have a lot of single family homes for rent. A lot of the affordable stuff gets gobbled up by flippers who then, make it the next 400K home, which is our median price. So yeah, single family homes, at least the stuff I buy is still up, not, up 3 to 5%, I would say. Um,
Okay.
so pretty cool. Let's totally switch gears now. You mentioned in the intro that something else you do is you have investments in private equity. I'm not sure if you follow, but somebody I listen to every weekend is the All In podcast, which are a bunch of private, like David Sachs, Chamath,
Mhm.
the other two I'm blanking on, Jason, and what's his name? The science guy. I'm forgetting the science guy's name. Anyways, they've talked about private equity really having to take some haircuts for the vintage in 2020 and 2021 when money was free. So I'm curious, what are you seeing in the private equity space for, kind of historical deals? And then we'll talk about what I think's coming in private equity.
A lot has changed over the last 3 years. I guess that's an easy way to put it. If you look at where we're at on a big picture thing, is we're coming out of a low interest rate environment. People are, where do I put my money? In 2021, if you had a company and you wanted to raise money, it was basically free, right?
Yeah.
Yep. Especially if you were doing anything in real estate, people were like, "Yep, this is awesome." And I think that the U.S. continues to spend like drunken sailors. And I think that going into 2024, they'll eventually do some rate cuts here. I think the market has clearly priced that in already.
Literally priced them in. Yeah. Clearly.
So private equities are a different animal. And I think that over time, the good ones will do well and the bad ones won't, right? And that's such a simple concept to say, but it really is looking at the underlying assets. So look at a bunch of REITs, right? REITs are giving off 10+% dividends. Sounds great, but what are they doing to the underlying asset to pay off that dividend?
Right. Yeah. I think there's something that's going to be true in the private equity space. It's really what happened in the '08 crash in residential. It was just a bunch of bad loans, a bunch of bad assumptions, the debt reset, and stuff had to go. You had to clean the system had to be clean. I think there's a lot of private equity deals that are done in the last 2 years that are going to go to zero. But you're right, the strongest ones will move on. But the other side of this, John, is where I wanted to go with this is I think the 2023 vintage and the 2024 vintage will likely go down as some of the best investments because not everything is getting funded. Money isn't free. It's harder to raise. So you're only looking at the best of the best stuff. How does that tie together? What do you think?
On the real estate side of things, I think that a lot of that floating debt will create opportunities for people to, buy something that a lot of people say generational wealth, right? Buy a
Yeah,
great asset at a good price. And over
correct.
time, the market will help you. On the private equity side, in cash flow is king, right?
Mhm.
Companies that make money, properties that make money will do well. Office space is obviously tailed off
Mhm.
just given people working from home. But I think that will rebound. And I think you're seeing a lot of properties out in San Francisco and other cities like that are trading for half of what they traded at 5 years ago. And
Yeah.
it's quite shocking to see that a lot of people are just selling it while it's down rather than trying to weather the storm. I'm sure they tried everything, but obviously they can't make it through.
Yeah, there was one building in San Francisco where the owner, right? So, I'll make up the numbers, right? $100 million building, $75 million in debt. The operator decides to stop paying. The bank forecloses. And this operator is the one that bought the building for like 55 million. They bought it for 20 million less than the debt. So now they have no debt and the bank ate 20 million. It was wild to think about. So yeah, there's a lot of that going on today. But you're absolutely right. I think there's generational wealth to be had where there's great pain, there's great opportunity. I think the syndication space specifically, and if we lump that in with private equity, there's a lot of LP money, a lot of brand new general partners who didn't know what they were doing. They were just great at the raise. They're not operators, and we have some pain to be felt. But on the other side of that pain, there's opportunity, and I look forward to buying the biggest building I've ever bought in the next 12 to 18 months because I'll scoop something up with the banking relationships I have. So I'm excited for what's coming, but there will be pain felt, I think.
Yeah, it sucks because your opportunity is someone else's failure, right? Not necessarily failure, more like a learning opportunity for that.
Right.
And it's unfortunate, but that's just the way the game is played. And I think that over time, the good players will continue to thrive, and the people who aped in at the high of the market, didn't know what they were doing, were just hey, money's falling from the sky. Let me grab a little bit.
Yeah.
I think that their portfolios are going to start hurting here shortly.
Yeah, I agree with that. So I'm curious, when you look out at 2024, do you see a recession? Do you think we skirt it? I mean, what's your crystal ball say?
I mean, equities are at all time high. right now,
Yeah.
right? The S&P
Yeah.
just reached an all-time high. The real estate market is slowly turning over depending on the sector. So like
Okay.
I mentioned in Phoenix and Tampa and other areas, right?
Austin.
Where I think a lot of people, Austin, where a lot of people aped in, especially the Airbnb crowd, I think is getting crushed right now, especially
Yeah.
with just regulations. New York just said no more Airbnbs pretty much. I know Miami did something similar as well. But yeah, I think that not necessarily a recession is coming, but I think a slight correction is in order, right? So
Okay.
I wasn't around for 2008. And I'm curious your thoughts about it. Does it look similar to what we saw in 2008? Obviously, I know that there was the subprime mortgages and a drastic difference in the underlying assets and the amount of money people had and their assets that they held. But do you see something similar happening here where, hey, look, we're due for a 30+% drawdown?
No, there's if you go residential, there's very, very little similarities because I've been buying since 2002, right? So I was 6, 7 years in looking every day. So I say this as a guy that, and oh, by the way, I'm a guy that sold at the top, right? So I not only saw it coming, I got out of the way. And no, there's on the residential side, there's no setup with a couple of exceptions. There are a few areas where people went too hard, too fast on can't miss strategies like Airbnb, and they're going to feel some pain, certainly, but that'll be regional and very specific. And it won't take the country down, right? The median price for the country. Um,
That's exactly my ways of thinking is as interest rates drop, prices will remain stable, right?
yeah,
Because
I
more buyers will
actually
come on.
exactly. I think nationally speaking, and I've said this for a year now. I think we're flat for 5 years. I think what happened in 2020 and 2021 and the first half of 2022 is we got a decade of appreciation done. So that means we got 7.5 years, again, just taking the analogy forward, of a flat market. How does that work? Well, you have to have wages. And I'm not talking nominal wages. I'm talking real wages increase because we can't stay at this unaffordability level forever. So I think flat prices, lower rates, and wages go up. That's my net strategy. That just takes time.
How
So,
much lower rates?
oh, that's the $20 million question.
Is it under 6% at the end of next year?
Yes,
Yes. Under 5.5?
no, gun to head,
No. So
sort of
somewhere
be.
in that 5.5, 6, yeah.
Yeah, if you gave me that range, I would take that. Yeah. Yeah. And again, much of that, just so I'm clear with everyone, is the historical average for what's called the spread comes in. Right. For those that haven't heard me talk about this, the historical average between the 10-year and the 30-year mortgage is 180 basis points. We've been operating for the last year roughly at 300. Today we're at like 285. So we could come down 100 basis points without the 10-year treasury falling. So yeah, I think we go sub 6 above 5.5. My hope, John, is we do it slowly. I don't hope we get to 5.5 by March. That would be
Mm-hmm.
bad. That would be too much, too fast, bad, bad, bad. So I hope the rates slow down. This has been wild the last 3 weeks or 4 weeks. This drop. So pretty
I
crazy.
think you have a bunch of people sitting there waiting for those interest rates to come down with their dry powder and saying, "Hey, look,
Yeah.
the second these drop, I'm hitting up every property that I used to talk to, and I'm saying, hey, you want to sell now? And I can get a little bit closer to your price." But once again, I always tell people is the one thing you can't renegotiate in real estate is your purchase price. Right. So
Correct.
you can renegotiate your rate a lot of times. You can renegotiate, points down, all these things. Over time when you refinance. But I think that you just can't renegotiate your purchase price, and I think that's a big deal for people.
Mhm.
And we're going to see some people here, I think, take some losses going into 2024. Obviously, market is saying that rate cuts are coming, and
Yeah.
we're going. Jerome Powell is saying rate cuts are coming, so let's see what happens.
Yeah. I think at this point, rate cuts are coming. We just have a timing discussion and a magnitude discussion. The Fed's saying 3 starting June. The market is saying 6 starting March. So somewhere between that is what's coming, I think. So I guess do you think we have a recession, like a full on 2-quarter negative GDP, unemployment spikes, or do you think this soft landing, which has happened once in the last 50 years, might actually occur?
I think it's more likely that we have a correction than a recession, but I don't really see a soft landing in our future, right? You mentioned unemployment. It's sitting right around where it was pre 2008, right?
Yeah.
Obviously, COVID made every single chart that people look at crazy, right?
Yeah.
So if you look at inflation, they're like, oh, it's coming down. Yeah, on a percent year over year basis, but look at the last 3 years,
Yeah.
right? And on a nominal
Yeah.
basis, it's up a ton. So I just think people need to sit back, relax, and try to not time the market, but just look for opportunities where you see them and base off today, right? So I'm seeing a lot of operators being like, hey, look, I'm going to buy to break even. I'm going to buy literally thinking I'm going to break even. So then in the future, I can hopefully, turn the tide. And I think with just high interest rates right now, people just, they don't see the opportunities like they did 2 years ago.
Yeah, it's a lot easier to find deals at 3% than 8%. That's for sure. There's no question. If somebody wanted to buy or sell or just ask more questions about Florida real estate, Miami in general, how should they reach out to you, John?
Any social media platform, I think, in existence, just John Pompliano on every single one of them. I'm even on Threads, which is surprising.
Wow, you're even on Threads. There you go. Go crazy. John, this has been a lot of fun. Any closing thoughts as we wrap this up?
No, I appreciate the time. I'm curious what you think is going to happen here coming up in 2024, like start of the year. I know you think that Moody, Zillow, everyone thinks it's going to be kind of flat over the next year. I'm
Yeah.
curious if you think like, is that across all sectors? How do you think
Yeah.
office performs?
Yeah. So if we kind of get into the more specifics, again, my call of flat, roughly speaking, is obviously very much residential focus. I think office has to have a come to Jesus meeting, right? There's a lot of buildings that were bought at high prices and work from home, their footprints. It's not going to work, right? The Class A stuff will rent, everything else is going to suffer. The good thing about office is they have long leases, right? Typically, a lease in an office is 5 years with options after that. So we probably won't see a wave of office pain, but it will be, onesie twosie for years to come. I think the cities that figure out incentives to encourage office conversions are going to win. I've seen some of this in New York, a little bit in San Francisco. It's probably happening elsewhere. I think that's going to be a big deal. It's a hard lift. The footprints are different. The infrastructure is different,
The
but
plumbing, everything.
yeah, it's just very different. But some of these buildings are trading below tear down value. I mean, there's got to be a way to make these things accountable. I think multifamily has a vintage problem, kind of like I was trying to say with private equity. I think there was a lot of, I mean, there are social media folks that were celebrating buying 3.5 caps, Class A 3.5 cap. How's that feel today, buddy? Probably not very good. A lot of it was in Florida, this particular operator, others as well. I think there are a lot of LPs that lost their money and don't know yet. That sucks. I think there's a lot
They're
of
waiting.
yeah.
There's going to be a capital call here shortly for those
Well,
LPs.
yeah, if it hasn't happened already.
Mhm.
More foreclosures coming. I do think the opportunity is going to be in multifamily, specifically to be clear, commercial multifamily, anything with commercial debt. It's this is the similarity to '08 to go back to your point earlier, John. And I talked about this with Ken McElroy. What happened in '08 single families? 51% of originated loans in '06 were 2-year ARMs of some type. So guess what? They blew up in '08. Shocking. 51%. Bad assumptions. Real estate never goes down. I went to events all the time. Housing never goes down. And it was get rich quick, easy money. What happened today in commercial, multifamily? Value add. You don't even have to do any value add. You do like 5% of the units and you sell it for a higher price. You can't make it pencil with normal debt. You get bridge debt. You get 1-year bridge debt. You get 1-year IO bridge debt. You can't make IOR look good. So you do this, you do that. It's just the stupidity in the deals that I saw in 21 and 22. I was like, they're doing it again, just in a different asset class. So I tried to call it out early. I got receipts talking about the pain coming. It's coming. And that pain, multifamily pain, will be fast. It's like right around the corner. It's not like office because multifamily has short-term leases. Vacancies are up. Effective rents are down because they're doing move-ins. It's multifamily is ugly, ugly, ugly right now, in my opinion.
Just think about the average person and what they can afford, and then look at the average home.
Yeah. Yeah. Pretty crazy. So, um, I'm personally excited for the opportunity because I've been getting prepared for this for a year to 18 months. But my win will be somebody else's pain. That's not lost on me. Hopefully, a lot of that pain is banks, but we'll see.
Yeah, I think the number one advice I have for people is, get your own infrastructure ready to go, right? Get your own knowledge bank ready to go. So when that opportunity comes up, you can go ahead and seize that opportunity. There's nothing worse than, sitting here right now thinking, oh, what can I do in 2024? How can I, make that generational wealth everyone's talking about? But you're not studying the market. You're not looking at, you're not talking to lenders. You're not building those relationships now. And instead you're just sitting there twiddling your thumbs.
You got to get ready to be ready. And,
Absolutely.
people watch me do it every day. So I've been getting ready for a while and talking about it. So I'm excited for what's coming. John, closing thoughts. And one more time, where can they find you?
Yeah, I appreciate you. That's my closing thought. Is thank
Thank you.
you. I was looking at your YouTube channel. You've built up a really nice YouTube channel with a lot of valuable content. So congratulations on that.
I appreciate that. And where can they find you?
John Pompliano, most likely on Twitter, Instagram, Threads, wherever. Just John Pompliano.
Yep. Follow him on Twitter or X. That's where I've got him. And thank you very much for responding to a direct message. I appreciate you. Thank you for being here today. Happy holidays.
You as well.